Bitcoin and Ethereum are basically frozen right now. Bitcoin is hovering around the mid-$76,000 range, Ethereum is sitting near $2,000, and honestly, the entire crypto market feels stuck waiting for the next headline. And right now, that headline is not coming from crypto itself, it is coming from the Middle East. According to recent reports, crypto markets remained mostly flat as investors reacted to the latest U.S. strikes connected to Iran tensions, with traders increasingly nervous about broader escalation, oil prices, and global macro uncertainty. And honestly, this is one of the clearest examples yet of how connected Bitcoin has become to the global financial system. A few years ago, crypto mostly traded inside its own little world. Now Bitcoin reacts to oil prices, bond yields, war headlines, Federal Reserve policy, and geopolitical tensions involving the United States and Iran. That is a completely different market environment than earlier crypto cycles. Now, the important thing to understand here is that the market is not necessarily pricing in total disaster right now. It is pricing in uncertainty. And uncertainty is usually what scares markets the most, because investors still do not fully know whether these latest U.S. strikes are part of a limited military response, or whether the situation could continue escalating further across the region. That matters because the Middle East still plays a massive role in global energy markets. Any disruption involving oil infrastructure, shipping lanes, or the Strait of Hormuz instantly impacts global risk sentiment. And when fear spikes, traders usually reduce exposure to risk assets first. That includes crypto. Now, despite all of that, Bitcoin holding around the mid-$76,000 range is actually pretty impressive historically. Seriously. Think about this for a second. The market is dealing with geopolitical tension, military headlines, rising oil prices, inflation concerns, and uncertainty around global growth. And Bitcoin is still sitting near levels that would have sounded completely insane during previous cycles. That says something important, because even though volatility remains high, the structure of the market has clearly changed over time. Institutional participation exists now. ETF infrastructure exists now. Governments openly discuss crypto regulation now, and Bitcoin itself increasingly behaves like a macro asset tied to broader financial conditions rather than just a speculative internet trade. Now, another thing I think people are underestimating is how quickly sentiment can shift once geopolitical fear starts cooling down. We have already seen examples this year where Bitcoin rebounded sharply the moment tensions appeared to ease even slightly. That is why short-term trading becomes extremely dangerous during periods like this. One headline can send crypto flying higher. Another headline can erase billions in market value within hours. And honestly, that volatility is exactly why risk management matters so much in crypto. Now, at the same time, while Bitcoin consolidates and traders wait for clearer direction, some investors start paying attention to infrastructure and scalability narratives underneath the surface. That is part of why projects like Bitcoin Hyper have been getting more attention recently. Not financial advice, obviously, but Bitcoin Hyper is currently priced around 0.0136806, with another pre-sale price increase happening in just over 12 hours. And honestly, the reason people are watching projects like this is because scalability conversations around Bitcoin continue growing as adoption expands globally. Bitcoin Hyper has also already been featured across CoinMarketCap, 99 Bitcoins, Bitcoin Magazine, and other crypto publications, which is one reason it has started showing up on more investors' radar lately. Now, personally, during volatile periods like this, I also think security and flexibility matter more than ever. That is why many crypto users prefer secure multi-chain wallets like the Best Wallet app, especially when market conditions become unpredictable and narratives start shifting fast. Because in crypto, being able to move quickly and manage assets safely actually matters, especially during geopolitical uncertainty. So bringing it all together, I honestly think this current crypto market says something important. The market is nervous, but it is not collapsing. Bitcoin is reacting like a global macro asset now, which means geopolitics, oil markets, and global uncertainty matter more than ever. And honestly, if tensions eventually cool down again, crypto could recover much faster than most fearful traders currently expect.